Good morning, everyone. This is Marshall Giller bringing you the morning comment for October 22nd. Now, Eurodollar plunged during Tuesday's European trading session on a newswire report that the ECB may expand its stimulus program in December to include the purchase of corporate bonds. This would more than double the assets that the ECB could buy and would enable ECB President Draghi to achieve his goal of returning the ECB's balance sheet to its early 2012 level, while at the same time circumventing the legal objections to buying sovereign bonds. The news is therefore significantly euro negative in that it shows the divergence in monetary policy between the Eurozone and the US is alive and well. The ECB news, together with some good US economic data on housing, sent the dollar up against almost all of its G10 counterparts. The Swedish krona was the weakest of the currencies, perhaps looking forward to next week's Riksbank meeting. Now, if the ECB is loosening, it'll be hard for the Riksbank to maintain a neutral stance because Sweden is already in deflation. Take a look at the graph that I've got on the comment on our website. Historically, when the Eurozone's inflation rate has been higher than Sweden's, as it is right now, normally the Eurozone's policy rate has also been higher, which it isn't. That's not the case now, so the Riksbank may have to cut its rates further. On the other hand, the Canadian dollar was the only G10 currency to gain against the US currency dollar, as the Parliamentary Budget Officer forecast a budget surplus for the current fiscal year, and in fact, surplus is out to 2020. He also revised up his forecast for growth this year and said that the Bank of Canada would keep its policy rate unchanged until the second quarter of next year. That's more hawkish than the market, which is discounting that rates will remain unchanged for all of next year. We may get further clarification on this point after today's Bank of Canada meeting. At their last meeting, the bank extended its interest rate pause another time and remained neutral. I expect that they'll repeat themselves and remain on hold. Although it's unanimously expected that they'll remain on hold this time, I think maintaining their neutral stance could prove negative for the Canadian dollar. The press conference after the meeting will be a key stress point today. Aside from that, the main item on today's agenda is the Bank of England minutes of its October policy meeting. The recent data for the UK suggests that the country's recovery is petering out, and this has pushed off market timing for the first rate hike. The minutes should reveal the bank's stance on the recent weak inflation data, as well as what the members think about the spare capacity of the labor market, given the fall in the unemployment rate. It'll be particularly interesting to see if there are any more dissenting voters, or, on the contrary, if the two dissenters change their stance given the poor data. In the US, the CPI for September is forecast to decline in pace, adding to concerns about whether the Fed is on track to meet its inflation target. That could prove negative for the dollar. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gitler, Head of Global FX Strategy at IronFX Global, wishing you solid trading.